Investors and traders, welcome to the channel Market Chart Path, and today is 23rd of April 2024. I hope everyone is having a great day. In this video segment, we are going to take a look at the key technology stocks traded on the New York Stock Exchange. These are the key tech stocks, including Tesla. So we'll start by taking a look at Tesla, which just announced its earnings. We'll take a look at Apple and Microsoft, Amazon, Shopify, NVIDIA, and Netflix, and time permitting, a few other stocks such as Zscaler. So this video is for educational purposes only, and it's not a financial advice. So what we are looking at is the daily chart of the Tesla stock. The video that I done for the stock indices yesterday, towards the end of it, we did take a look at Tesla and also Apple. And in the Tesla chart, one of the things that we were looking at was this smaller ABCD price projection, one-to-one price projection ABCD, which was completing right at the bottom of the 22nd of April 2024. So what we were actually discussing was that the price has actually moved below this channel that we were watching, also below this bigger ABCD, and also the price had actually gone and closed below the 78.6% retracement as well. However, we did have this smaller ABCD pattern completing right here, so there was a possibility of some sort of action to take place around this, which could potentially be a bottom. However, if this one fails, this smaller ABCD, then the bigger ABCD, which is in this purple line here, could in fact see the price of this stock move as low as $114 per share level. So now today the earnings have come out, and in the pre-market there is a fair amount of action in the stock, but what really matters is how the stock is going to close at the end of trading tomorrow. And right now, what we are looking at in pre-markets on trading view is the stock has jumped quite a bit, and if the stock is able to actually build on this momentum and gap up tomorrow and move higher, then what we really like to see is this stock to gain a lot of strength as in a shorter term, really shorter term. If we just take this swing and we move and we just draw a retracement, then this 163, roughly, let's say $164 per share level, that's the 38.2% retracement. Going above this will be a first sign of strength in my opinion. And then of course, if it is able to take a go above $185, taking out this swing would be a pretty good indication that we might have actually seen early signs of a turnaround in the stock, which has been going down since July of 2023, which has been quite a long time. So this is what we are watching. The low of last Thursday, 22nd of April 2024, is really important. And if the price begins to move lower, this bigger ABCD in purple might be in play. Otherwise, if the stock begins to close higher, especially $164 per share level in tomorrow's trading at the close, then this ABCD, the smaller one, might have done a trick. With that, let's begin to take a look at the Apple stock. Here we go. This is the daily chart of Apple. In yesterday's video, we were also watching this, and what we discussed was where the price was trading around $165. $163 roughly, in my opinion, is a pretty strong level that the market should not break to the downside. Going below $160 per share level, in my opinion, and then opens up the door to $155 per share level. And what we have seen over the course of last two trading days, it's been a trading range. And yesterday the market did actually quite well for Apple, and we have seen a bullish candle close. And if the stock is able to build momentum on that and is able to take out Monday's high and especially begin to close above $170 per share level, that where we have this 20-day moving average, and then a shorter term the momentum will also become positive, and of course then tackling this $177 per share, or roughly speaking $180 per share level, which is the 38.2% retracement, and going above that would be really positive for the stock, and could in fact the stock could go and test the top of the range. And we do have some higher targets, but we'll take one thing at a time. For now, we're just really watching really carefully. $163 on the downside. If it goes below that, $155 could be the next target. And if it begins to close above $177 and roughly $180, that's going to be constructive price action for Apple stock, in my opinion. Let's take a look at Amazon. So this is the uh, e-commerce giant, and we'll just switch over to the weekly chart. And here just wanted to show you that this stock really likes to do double tops and double bottoms. It was a double top here, the market just went lower. It has been a double bottom here, and the market has gone and is retesting these highs again, and it's doing it with a bigger ABCD pattern as well. But the good thing is that this move, this CD leg, I've not labeled it, but this is the CD leg. It came off the 38.2% retracement. So what we could expect is basically a correction, which could be as much as the previous one in this leg or in this cycle, which could in fact see the stock could move as low as $162 per share level. And from here, if the stock is bullish, then it would perhaps make another attempt and finally break out of this trading range. And this has been a really massive trading range for this stock. However, also in my opinion, if this stock begins to break below this 38.2% retracement, then this structural high, the stock could actually come as low as 145. One test it'll have to do is this 20-week moving average. If this breaks as well, then most likely some support will come around the structural high, and breaking below this one, it will change quite a few things, in my opinion. So just watching the stock of Amazon, and on the daily chart, we can see that the stock has been moving lower. In fact, what it has done is something quite similar to this previous correction. In fact, it's gone more than that, a little more than that. And let's see where it is in terms of its retracement, and the stock was right at the 38.2%. So that's actually quite good. Moving below this on the daily chart, we have this gap here, although it was filled a little bit, but it's possible this gap actually get fully filled, and that would be pretty much around the 61.8% retracement. There we go. So 161, $162. If 172 breaks to the downside is a possibility. Okay, so now we'll take a look at Google. There we go. Google has been trading at a resistance. So this $172, excuse me, 161.82 was the 1.272 expansion, and that caused a pullback in the stock. The stock went and tested this 20-day moving average. The price on two consecutive daily basis has closed above that, so the momentum is strong to the upside. However, there is a pretty strong resistance level at the 170, and the reasons are we have this shorter smaller ABCD one-to-one price projection, which comes around 165, and then above that we have 1.618 expansion of this swing. So let me actually label it this one. Okay, so that's going to be the BC swing, and then we also have the 1.272 expansion of this entire swing, going back from the top in November 2021 to the bottom, which came in around January of 2023. So when we have a confluence of two or more, it's something we pay really close attention to. So $170 per share level, in my opinion, is going to be pretty strong resistance. On the upside, if it's able to break above that, 194 is also a possibility, but in my opinion, it's going to face a stiff resistance around $170 should the stock get there. So this is Google, Microsoft. So let's take a look at Microsoft. While we are on Google, just my opinion, I think I don't know what the news will be around here, but if the market does get to 170 level, um, because of the, this is just my opinion, um, there has been a significant amount of improvement or discovery in the artificial intelligence field. But what is not really known is how that might be able to impact the kind of work we do in our workplaces. There is a fair amount of advancement in that field. Some of that technology is maturing enough that it could be used in office work. Um, and it's just my opinion that there's a possibility what we begin to see over the course of next 3 to 6 months is quite a lot of things which happen in the technology companies, perhaps could be related to um, programming and stuff like that. We could see the nature of the jobs changing, and we could actually see some of these companies announcing, redundancies, and actually that could be just because of the change in the way the work is being done, especially due to artificial intelligence. It could be some other reasons as well, but the big one I can think about is the artificial intelligence because it has advanced quite a lot. So companies like Google, some other companies, perhaps maybe Netflix, technology related companies, IT related companies, the Amazon as well. Maybe in next 3 to 6 months, they begin to announce certain changes in job cuts, etc. We've already seen some news come out from Tesla. So I believe, in my opinion, technology companies might actually begin to look at the way the normal office work gets done. Just a thought. Okay, we'll wait and see what happens actually. So now let's take a look at Microsoft daily chart of Microsoft. What we see is basically the market goes into a lot of distribution around this region, and that has come after a fairly a long run, and the market went a little bit below the 38.2 but tested this bottom of this range. A good price action today. Maybe it just goes and tests this 20 day moving average on the weekly chart. Here we go. So this is where it is finding its resistance coming from the 1.618 expansion 433. So not really surprising, because this is something, this level we discussed way in advance, that the market actually pulls back, test the bottom of this range, and right at the 20-week moving average as well. So it's a really critical point where it is trading, because if it breaks below that, yeah, the next structural support comes around 380. Below that, you can go and test this top of this old range around $350 per share. That also remains possible. And then if we begin to resume from that, then of course we have another ABCD, which could take the prices much higher, around $460 per share level. But because of 1.618 expansion, um, the chances are maybe we might have actually sideways price action to maybe a little bit lower, um, before forming a pretty good base. So just we'll have to wait and see. One more thing on the Microsoft. Just want to show you this really nice trend line going back. Oh my goodness, can't even show it properly here. I had just joined these lows going back to 2018, then 2020. So there is a pretty nice trend line here, which is intact. So longer term, this low of around $215 is really key. So this company stock is pretty strong, but might just go through some pullbacks. Okay, and then let's take a look at NVIDIA. So the NVIDIA stock has had a pullback last Friday, and what we were looking at was, let's go to the weekly chart quickly. Also take a look at this. Um, yeah, it's just, look on the weekly chart. It's quite clear. It just came right to the 38.2% retracement, and we have the 20-week moving average just below that. So in my opinion, this $750 is a pretty strong support. So it's also the week of 15th of Monday uh, week was pretty strong to the downside. Excuse me. But as long as this 38.2% retracement is held, the psychological level of $1,000 per share level might actually be achievable. So we'll have to wait and see. And going below this 750, opens up the door for further correction to the downside in NVIDIA. Okay, what's the other stock we can take a look at? Let's take a look at Netflix. Here we go. So Netflix, pretty strong gap to the downside last Friday, and now it had a recovery rally here. But if you look at, we were really targeting about $580 per share level because that was or 490 when it broke that, and 580 because that's the 78.6% retracement. But what we are seeing now is the stock has not actually uh, made a new all-time high, and with this kind of price action, maybe there's a chance that the stock could actually move lower, or this corrective move could continue, and the 38.2% retracement comes out of 527. So that's going to be a key price level to watch. Below this, in my opinion, it just opens up the door to even 460, which is 61.8% retracement. Then let's take a look at shop. This is the Shopify e-commerce. Um, Possibility of this ABCD down to $65 per share level also remains. So we'll have to wait and see and watch this one. Z scaler. So the Z scaler has been disappointing because we were watching for this 193 level, which was also a very nice ABCD one-to-one price projection, coming right at the 38.2% retracement. The stock had been actually weaker, and it moved around to 50%. So it has actually retraced 50% of this entire move. And if we just take this low to this high right here, the stock is um, it's above it's below 61.8%, but also above the 78.6% retracement. But interestingly, it's at the 1.618 expansion of this little BC swing. So yeah, for this stock to improve, it needs to begin to close above its 20-day moving average and really improve its momentum. Otherwise, I do think it's just going down right here around 160 to possibly even $152 per share level. That also remains a possibility for Zscaler. Last but not least, we'll take a look at Roblox. So Roblox has been pretty disappointing for us because we were watching for this ABCD price projection around 57 to $60 per share level, but the market is in a lot of range, a lot of consolidation around here. It's quite visible on the weekly chart. Here we go. This is the weekly chart. So the possibility remains, if it is able to break above the 53 resistance level, which is the top of the range, to actually go and hit that $67 per share level, which is the 38.2% retracement remains the target. But for a very long time, it's been a pretty long range bound market, and eventually it'll break out. We'll have to wait and see how long it will take. So that's what we're watching in the tech stocks. Thank you very much for watching the video. Good luck, good trading. Speak to you guys soon.